And then, of course, with the spot Bitcoin ETFs coming out, we've seen the price increase, or there's been volatility around it, but now it seems to be breaking out the price. And that's also good for Coinbase. So a lot of wins. And of course, their EBITDA was fantastic. They've turned into profitability.
Hey guys, welcome back to Everyday Finance. In this video, Cathie Wood discuss about Bitcoin and other crypto. According to Cathie Wood, they are performing exceptionally well in a highly volatile market. Trading platforms thrive in times of volatility, and Cathie Wood have certainly experienced a significant amount of that recently. Additionally, given the recent release of Bitcoin ETFs, we have observed price fluctuations and increased volatility. However, it appears that the price is now experiencing a significant surge, which is a positive development. Coinbase is a popular cryptocurrency exchange platform. Well, they have certainly achieved a lot of wins, and their idea has been absolutely fantastic. It seems like they have become profitable. It seems that the outlook for 2024 is positive. However, it is important to consider the potential impact of market conditions on this projection. Looking over the history of Bitcoin, the allocation that has proven to be optimal on average throughout this time period is approximately 5% the average percentage. When we initially gained exposure to Bitcoin through GBTC was slightly below 5% in 2015. The optimal allocation would have been less than 0.5%. However, it has been steadily increasing. One of the things that has caught the attention of asset allocators in the past year is the growing interest in Bitcoin. Not only is it considered a risky asset, but it actually appreciated during the regional bank crisis last year, when regional banks were experiencing significant difficulties. And lots of things Cathie would discuss, so please watch the video to end, and share this video and subscribe our channel Everyday Finance. Thanks.
Well, one of the things that it's doing right is that it is, from a regulatory point of view, the most compliant exchange out there. And it's losing all its competition. Last year's demise of FTX was very important, and even Binance's issues have had a positive impact on Coinbase from a market share point of view. I think they're also in the right place at the right time, and they're executing brilliantly. The market is very volatile, so trading platforms benefit from volatility, and we certainly have had a lot of that recently. And then, of course, with the spot Bitcoin ETFs coming out, we've seen the price increase, or there's been volatility around it, but now it seems to be breaking out the price. And that's also good for Coinbase. So a lot of wins. And of course, their EBITDA was fantastic. They've turned into profitability. We think the odds are high. And the reason we say that is because of Ripple's win, Grayscale's win, but especially Ripple's win, and what we learned about securities and timing of issuance versus trading on a platform when something starts as a security and evolves into something else, not a security. Yes, well, Coinbase has had a magnificent move since all of the regulatory concerns were plaguing it last year. I think it's up more than 5-fold. And so this is simple portfolio management. There are other stocks in the portfolio that are lagging. This has had a great move. And so it's simply trimming, profit taking, and really nothing more than that. Yes. So if you look over the history of Bitcoin, the optimal allocation on average over this time period has been roughly 5%, maybe a little bit below 5%. That's the average. When we first put Bitcoin, or got exposure to Bitcoin through GBTC in 2015, the optimal allocation would have been less than 0.5%, but it's been rising. And I think one of the things that we learned in the last year that I think is encouraging asset allocators to think seriously.
Cathie Wood believes that the SEC's approval has prompted institutions to consider it more thoughtfully and take a stance. We are currently in the learning phase, and Cathie Wood believes that over time, there will be a shift towards this new movement. The price of the asset class will continue to rise. Regardless of whether it happens this year, it is a constant trend that we have observed. Volatility can be influenced by short-term factors, making a one-year period seem relatively brief. However, over a 5-year period, Ark Invest expresses great confidence. Let's back to the Cathie Wood interview.
About Bitcoin is it is not only a risk-on asset, but during the regional bank crisis last year, it appreciated as regional banks were falling apart. And so it has become a flight quality asset as well. So think about that, risk on and risk off. Volatile to be sure, but risk on and risk off, that's quite something. And then the other thing to consider is institutions are, by and large, have not allocated to Bitcoin. And yet it is a new asset class, and they have to consider the ramifications of that from a diversification point of view. Diversification into a new asset class that is not highly correlated with other asset classes, stocks, bonds, commodities, and others, usually increases returns per unit of risk, which is what allocators want. And the other thing I'll note is the number of Bitcoin outstanding right now is a little over 19.5 million. The maximum number we will ever see is 21 million. So this scarce asset is getting scarcer, and institutions have not even gotten involved yet in any big way. Yeah, as you know, we do 5-year plus forecasts, and so we're focused on how institutions and countries and companies might use this new asset class for different reasons, and so we think we've just begun from a price appreciation point of view. This is part of a journey. I do believe that the SEC giving the green light has encouraged institutions to think carefully about it and have a point of view. So we're in the learning phase right now, and I think over time that this movement into this new asset class will continue to push up the price. Whether it happens this year, you know, there are always short-term causes for volatility. So a 1-year period is pretty short, but over a 5-year period, our confidence is very high. Well, it has been very successful, and we are very pleased to be number 3 if you're excluding GBTC, which has a much higher fee than any of us. Then you've got BlackRock, Fidelity, and ARK 21 shares. That is fine company, and we are very pleased to be number 3. I think one of the reasons we are is our history with Bitcoin. We've been doing research on Bitcoin and publishing and giving it away since 2014. Another reason we think we're being successful is we have an incredible sales team at Resolute who has had to get its head around Bitcoin since 2016, when very few people thought it should have a place in a portfolio. They have developed confidence, they can explain it, and they can hold hands through volatility. And I think the other thing is our ops, our infrastructure and ops with our partner 21 shares is showing itself to be very efficient, and you can tell that in terms of spread. Sometimes we'll have the tightest spreads in the market. So I think we're firing all cylinders, and I'm just so proud of everyone who's been involved on this journey with us.
According to Cathie Wood, the performance has been impressive, and ARK Invest is delighted to be ranked 3rd, excluding GBTC, which has a significantly higher position. If you're looking for companies with higher fees, BlackRock, Fidelity, and ARK 21 shares are worth considering. They are reputable companies, And Ark Invest is another one to look into. We are extremely satisfied, and Cathie Wood believes that one of the factors contributing to our satisfaction is our extensive experience and research in the field of Bitcoin. Ark have dedicated significant efforts to studying Bitcoin and sharing our findings, sharing it freely, since 2014. One of the reasons why Ark Invest believes we are achieving success is due to the exceptional sales team at Resolute since 2016. When Bitcoin was widely dismissed as an investment option. It has been a challenge for many to understand its potential in a portfolio. They have gained a strong sense of assurance in their ability to articulate the subject matter and navigate through periods of unpredictability. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance, and we will meet in next video. Thanks.